I'm Ashton Addison from EventChain for Investmentpitch Media and FinTech News Network. And today on Blockchain Interviews, we have Elsa Madrolle, the International GM of CoolBitX. Elsa, thank you so much for taking the time to come on the show. It's a pleasure to have you here today.
Thanks, Ashton.
You're very welcome. I'm excited to dive into CoolBitX. We've spoken before, and I know that your team has released a hardware wallet, the Cool Wallet S, but you also lead the industry through innovation in security. Can you talk about the main focuses of CoolBitX right now and the breadth of your services?
Yeah, sure. So CoolBitX was founded in 2014 by Michael, whom you know, and you are absolutely right. Initially, we were focused on making wallets. We released the Cool Wallet S, which was first Bluetooth credit card sized mobile hardware wallet on the market. It's still around, and we continue to create branded and enhanced versions of it for different clients. But that's a product directed to the end user market. But as we were working with one of our largest clients of that wallet, we realized that they actually had other concerns, specifically around regulation and how to go about starting to become compliant with some of the new rules that were being announced. So we realized that we have technology in-house that could be adapted to help them. And so we built it out. Specifically this year, as a result, we're spending a lot of time on what's called the travel rule, which is the compulsory exchange of sender and receiver information for transfers between crypto exchanges. So we've evolved into becoming a blockchain security solutions provider for institutions.
That's great. And it's so interesting how companies can adapt like this, where, as you know, there are a lot of security protocols that need to be put in place for exchanges to keep their funds safe. But if they don't have the proper compliance, having a hardware wallet or having cold storage, there can still be infiltrations, and there sort of needs to be security, all around. So I know that your company has been focused on the crypto regulatory environment in Japan, and there are a lot of Japanese exchanges. Could you talk about what does the current regulatory environment look like in Japan right now, and how popular is that, and is it growing?
Sure. I mean, in Japan, if you're looking at regulation, you got to kind of keep in mind the backdrop of a very, very tough traditional investment environment in Japan. You've got negative interest rates for years, equity markets that never really recovered the peaks of the 90s. You've got tough FX markets in Japan. So people really started to have to look outside of Japan for returns. So it's not really a surprise to me that crypto is so popular in Japan as a result. But since the hacks over the years, two of the largest hacks in the industry, in Japan, the Japanese government's been under a lot of pressure to protect consumers on the back of that. So generally, when a government needs to create regulation, a country has a choice. They can either start from scratch and create brand new regulation. You see this in some of the offshore markets. Or if they already have an established financial system, it's usually easier and they'll tend to just amend their existing regulations. So that's obviously what's happening in Japan. So around this time last year, the regulator announced that there was a new slate of regulation approved and that it would come into effect around April 2020. And then they went silent for a while. And then they announced a few weeks ago that it was going to be May 1st of this year. So the industry was shocked, but really shouldn't have been. I mean, we've known for a year that it was coming, and Japan has its history. But obviously on top of that, we've got COVID-19. Cyber crimes on the rise. We've had regulators around the world in a race against the clock with organizations like the Financial Action Task Force telling countries that they need to be ready by the end of the year. So from May 1st, Japan has regulation coming. So some of the key points of that regulation: in order to run a crypto exchange in Japan going forward, you will need to either A, be a fully licensed Japanese entity with a license from the Japanese FSA, or B, have a similarly licensed entity in your own country before you're able to get that Japanese license. Now, that's saying a lot because there are very few countries that are going to be as stringent as Japan. And so that's really setting the stage for who they're going to accept. Not a lot of countries. You can think that maybe the US, but maybe not China. So you can already see where that's going with that. To get that license, it's a capital requirement of 10 million yen. That's 450,000 US dollars, a lot of money. And then one of the key developments is that the exchange is going to need to segregate customer deposits from their own cash flows. So that's going to develop the use of what you were saying, recognized custodians through cold storage. And if they don't do that, or if the end user insists on keeping their crypto in a hot wallet, on the exchange's hot wallet, then the exchange will have to hold the same types of assets in the same quantity to be able to pay them back in case of a hack. And that's a pretty unusual development and a pretty strong stance that the government's taking.
Wow, that's quite some stringent rules, potentially limiting competitive environments. Do you see this as making it harder for exchanges to come in and creating sort of an oligopoly of the large exchanges taking over? Is this good for cryptocurrency adoption and for the users of traders in Japan that are trading cryptocurrency?
I mean, it depends on what you mean by good, right? Is good defined as the price of Bitcoin is going to rise? What you want, what I think we all want, is for this industry to stick, so to speak, and for ultimately users to have a safe experience and eventually have institutional investors coming in. And so these are all necessary things that need to happen before that can take place. Mm-hmm. Do regulators need to go as far as Japan went? Unfortunately, Japan was hit with such serious hacks that they have had to go all the way. I think what you'll probably see in the rest of the world is a more gradual adoption of regulation than what Japan has done. So mm-hmm. Ultimately, I personally believe that this is good for the industry. Now, I come from 2 decades of traditional financial services, so I would say something like that. But it will be growing pains. We are going to see some of the smaller exchanges maybe not necessarily go out of business, but they may have to merge with each other. They may get bought by the bigger exchanges. Yes, you may end up with an oligopoly as a result. Mm-hmm. But there are too many exchanges anyway, so I don't think necessarily that's a bad thing.
Mm-hmm. Yeah, I agree with you on that point. And you also mentioned there about custodial, holding of the user's funds by the exchanges. With a hot wallet, the exchange has access to the private keys of the users so that they can help facilitate the trades between Bitcoin and other cryptocurrencies. But in this new regulation, they need to be able to pay back 100% of those funds and have all of those funds held. For example, in Canada, when the Quadriga CX exchange, infamous exchange, didn't have the funds, it seemed many of these exchanges are holding funds. It shows the number in your account, but they may not be holding those funds. They may be moving them around or lending them out on reserve, right? So how do you see this affecting cryptocurrency exchanges in Japan, at least? Do you think that they were lending out funds before, or is this going to be a drastic change for them having to hold all the funds, or was it already like that?
That's an interesting question. I think everyone understands now, in hindsight, it's 2020, that it is a bad idea to hold anything more than what you want to trade on a day-to-day basis in a hot wallet. I think there's still a large misunderstanding between what is a hardware wallet and what is considered cold storage. So a hardware wallet, just to be precise, lets you store your encryption keys to access your crypto, but you're really just relying on the hardware to access your data. Whereas a cold storage solution is one step further, whether that's through a wallet device or another solution. It requires both software and hardware authorization. So it's actually much more secure. Mm-hmm. So yeah, from next month, all exchanges in Japan are going to have to offer not just hardware wallets, but a real way to manage users' money separately from their own cash flow. So effectively, they're going to have to find cold storage solutions for customers or be ready to reimburse them what's in the hot wallet. What that's going to mean, in my opinion, is that the exchanges are probably going to charge you more to hold your assets in a hot wallet. Mm-hmm. It's a pretty big incentive to get everybody up and running in cold storage. This is nothing new. In Japan, actually, we launched a pilot program with SBI Virtual Currencies in 2019 that allowed their users to withdraw their assets from their hot wallets to a dedicated KYC cold storage wallet. And that program was actually a success. That was ahead of the regulation coming. And we're looking at those types of solutions and how we can continue to offer these types of things to an evolving market. Mm-hmm.
One of the reasons that traders prefer to keep their coins on the exchange in a hot wallet is for easy access to trade them, within seconds of the price moving, to be able to not have to go get a hard wallet from wherever you're storing it, plug it in, transfer it to the exchange. There's quite a delay in time. Is there going to be a difference between, cold storage wallets that are built into exchanges that aren't necessarily a dedicated hardware wallet that can be pulled offline versus the cold storage that's just a Trezor or a Ledger or a Cool Wallet S? Is there going to be a major difference?
I think, I think that's just innovation. I think whenever things like this happen, everybody throws their arms in the air going, this is crazy. This is going to change. This is going to affect my business model. I'm not going to be able to trade. I'm not going to be able to do this. And then over time, people digest the news and they figure it out. So I think we will see innovation in the space. And, it may put some providers out of business, and you have to be agile in this space. So, yes, I think we will start to see drastic improvements. The analogy is the internet of, the late 90s, where you had the that terrible sound as the router was trying to connect, compared to what we've got today.
Yeah, I guess it's moving from the Wild West to the mild West. And I also saw that Coolbit is working outside of Japan, into Canada, where we are, and other countries as well. Do you see other countries following suit with what Japan is doing, or how do you see this expanding out globally?
Yeah, I think, Canada is an interesting one, because your government suddenly announced regulation that I think people were not expecting to move so quickly. And that was definitely, I think, it intended to meet the FATF guideline of June 2020 for compliance. So FATF is the Financial Action Task Force. They issued guidelines last year in June 2019 for countries, regulators to issue regulation around things like the travel rule, et cetera. And so the Canadian regulator actually, issuing this ahead of June is sending a strong signal. So you are seeing it across the world. I think we're gonna continue between now and probably the end of the year to see headlines probably every week, right? There's 30 weeks left in the year. We're probably going to see 30 countries, at least one a week, coming up with headlines about, okay, this is how we're going to do it. And everyone's trying to get to the same place, but different countries have different experiences based on the level of criminality they've got in their own country, and generally their appetite for regulation, stringent regulation or not.
Yeah, well, that's very interesting. I'm looking forward to seeing how that plays out with the different countries and who are the laggards and who are the innovators. So we'll see how that goes. And you mentioned earlier about May 1st being a deadline for Japan. I read that that also affects the crypto asset derivatives market. Now, the derivatives they can play a big part, obviously not as large as the stock market derivatives market, which is gigantic, but how is that going to affect more than just Bitcoin and your regular cryptocurrencies?
So I guess the first thing to note in Japan is that actually 80% of volume in Japan is estimated to come from derivatives trading. So it is, a gigantic, so to speak, part of that market. So there are changes that are going to affect a significant chunk of the market. The first thing is that the trader type is going to be classified. So you will differentiate between margin traders versus token issuers, and that's in order to encourage ICO as a fundraising tool and not crush ICOs, but really kind of drill down on the margin traders. If an exchange wants to offer leverage, this is the killer. If the exchange wants to offer leverage, they have to register. That's fine. They've got 18 months to do that. And that's a different registration to the anti-money laundering registration. But 18 months allows the existing exchanges to come in line over time. The leverage, though, there is going to be a cap on leverage. And, we've seen exchanges offer as much as this insane number of 300 times leverage. More common is 100 times. Yet more common 25 times. The average, according to the JVCA last year, I think was 11 times. Now that cap on leverage is going to be 2 to 4 times. Now that seems like a drastic change, but if you compare it to, let's say, the U.S., a U.S. qualified retail investor who wants to trade derivatives in traditional markets is capped at 3 times leverage. So, and with the ability to get margin called and reduced at any time, et cetera, et cetera. So it's aligning itself with derivatives trading in traditional markets. What's more interesting actually is that it aligns, that leverage number, it aligns itself with the FX industry in Japan. And so that's actually a very positive, strong signal that, Japan could over time be setting the stage to edge towards crypto becoming a legal tender.
Well, that sounds like a great step towards that. So if that's the case, then it'd be great to look forward to seeing that regulation in Japan. So that's all the time that we have for the interview, Elsa. But it sounds like Coolbit is working with a lot of different exchanges moving forward. If there are viewers that are looking to learn more information, what's the best way for them to...
I think I lost you, unfortunately. Are you there?
Yep. What's the best way for...
Sorry, I didn't hear your last question.
No problem. I was just asking, what is the best way for viewers to learn more about Coolbit, follow along with the updates they're making and these regulations that you're working with?
You can find us on all the social media channels or on CoolBitX.com.